Hello and welcome to PC School's Discovery Series webinar recording. And I'm Kenton Newell from Cole School Experts. And today we're going to be looking at credible financial reporting for schools. I'm the Business Relation Manager here at Cole School Experts. And later on, I'm going to be joined by Britta Lidhams, who is one of our school accountants and specialists, who's going to be looking at the topic of credible reporting with governance in a Q&A session in the second part of this webinar. So first of all, who are Cole School Experts and how do we work with PC School? Some of you may be aware of who we are as a team of consultants to schools with a lot of educational industry experience, but work with independent schools across Australia and New Zealand. And our objective is to be there for business managers in a support role and a consultant role, and to offer financial services online and virtually to their schools and their teams. We're able to provide on-site and virtual services. And one of the areas that we work with is also in software professional services. Obviously, have a look on our website and it will give you a little bit more information about what we're doing and how we do it. But we also are able to offer seminars and training and networking events through our Cole Connect brand. And it's been great that we're seeing many of you attend those sessions, both when we've been around touring in the States and also online in our webinars and thought leadership sessions. But one of the main things that we do really love to concentrate on is connecting with service partners in the industry, like PC Schools and the Nelnet Group. And we see that more and more our role as being the glue in the middle as between the schools and the strategic partners that we work with in the sector. And if you have a look on our website, you'll be able to see many of the suppliers and service providers in the sector that we work closely with, so that we can collaborate with those to create a one-stop hub for the school business managers and their teams. Now, one of the services that we focus on with PC Schools and the Nelnet team, including the FACS team, is our software professional services. And we work in collaboration with those to be able to provide services to the schools and helping them from a financial aspect, especially with the PC Schools, in helping them with setup, with consulting on reporting, health checks, and doing training on the use of the software in the context of how that operationally works from a finance perspective too. So we're more than welcome to reach out to our team or through PC Schools and see how we can help you and your team with that. So, credible reporting for schools. Schools face many types of risks and challenges, as we all know. And when we consider the operational vulnerability and financial sustainability of schools, it is vital for us to focus on the importance of effective financial reporting. So, what are the risks? And how do we reduce the impact of our schools' financials? And what methods do we use to adapt our reporting as we address vulnerability and sustainability? There are many elements of finance reporting, and the top three main areas that require priority of consideration, and which we'll look at a little bit today, are these: timing, when to present relevant data; content, what information to include at an appropriate level of detail; and stakeholders, who is the audience requiring information to make the decisions. In all three of these reporting elements, the absolute key ingredient is data. Not just my thoughts. Have a look at some of these quotes. Without data, you're just another person with an opinion. And another one by someone who's very familiar, Mark Twain: data is like garbage. You'd better know what you're going to do with it before you collect it. So an absolute key ingredient of our reporting process is our data. So whether you're in a management meeting discussing results with a colleague or a parent stakeholder in a committee meeting, what you have to say is just an opinion unless you're able to validate the presentation with hard facts and effective reporting data. If you're providing reports to another stakeholder, it is the accurate, relevant data that underpins your report that enables that stakeholder to make big impact decisions for the school. So if data is absolutely vital in creating credible financial reports, what about data garbage? Before we even get to having to prepare reports, we must ask, how are we gathering the data, and is what we are collecting relevant? Suitable consideration of this and relevant planning of data collection within our systems, like PC schools, is very important, well in advance. And we need to do that well in advance of when that data needs to be used in our reporting process. Because there's things happen in schools, as we know, and we've experienced that a fair bit over the last couple of years, haven't we, here in Australia especially. But when a crisis hits, it's too late to consider the accuracy and the relevance of that data. There is neither time, there is neither resources or the priority to address data collection during crisis or an emergency or in a critical process within the school, when the reporting of the relevant data is more important than ever, not the consideration of the collection of it or its accuracy. It can be, and has been, the difference to being financially sustainable or not in a situation like that. So one of the things that we advise is that schools review with a consultant, one of the PC school team or one of our consultants, the setup of your financial system and your reporting module. What we want to make sure, one of our objectives is to ensure you have optimal setup of the software that you've invested in. We want to ensure that you're using all the relevant modules, and that links in with what your reporting objectives are. We want to ensure that you are collecting data accurately for the reports that you want to produce. We need to make sure that you are completing reconciliations and balance checks regularly, and if where possible, make them an automated process to make it more efficient. And we want to ensure that you review the effectiveness and accuracy of your financial and admin processes that feed the data into your financial system. It's not just about what happens within the software. Quite often the critical part of the process is what happens before that, that is feeding the database within your software. So let us now consider the types of reporting we prepare and present to enable the most effective decision making in our schools. One thing is very clear, and that is that financial reporting is not sufficient on its own. Financial reporting is not sufficient on its own, especially just the historical financial statements. Now, that statement may sound obvious, but there are still plenty of schools that are preparing a little more, and it's always good practice to review what we are reporting on and why. And we do recommend a regular look at your reporting structure and process and format. It doesn't matter how quickly we prepare and release historical financial statements, because we should be never making them the report for decision making. These types of reports are often a statutory requirement, as we know, and that is all they are. Schools need timely and accurate information that looks forward and helps them and their stakeholders make decisions. Monthly and regular financial reporting that's required for the operational objectives of the school should never be done using the same template or format as the annual accounts. Schools need to include management reporting, not just financial reporting. Reporting that includes other data, not just historical financial figures. Reporting that tells stories with dollar figures. Reporting that looks forward and can be used to respond to a crisis. Maybe we could ask the questions of our own reports, such as, what do the actual dollar figures mean without the context of the school's strategic objectives? Why are we doing it? What is the purpose of what we're producing? And what do they mean? What do the dollar numbers mean without the context of non-financial data? Are we including non-financial data in our reports? And how are we showing the relationship between them and the numbers? Because context and the backdrop to what we are reporting against is so important. Even then, strategic objectives change and do overnight in a time of crisis. So does our reporting change accordingly? Context and the backdrop to what we are reporting against is so important, and that changes frequently. Accountants in schools should be including non-financial data in their reports to add meat to the bones or to provide a storyline. And the storyline that we're trying to lead with our reporting is to that final chapter. And so some of the information that we should be including is student stats, economic and environmental commentary, performance of other areas of the school, etc. And some of the contextual data that we need is often also available in your school management system, as we know. So one of the exercises and projects that we can look at is how can we link the databases of information into your financial reports? Or how can we use some of the other modules of the software or the fields in the software to store the data that you don't currently at the moment, that can be extremely useful as the context to your story that you're presenting in your reports. So again, speak to some of the PC school consultants or school experts like ourselves that can have a look and work with you to ensure that you're getting the best out of the system that you're using for your report. Now, to assist with the type of relevant report to produce, we've got a few objectives of effective reporting that we can consider for a moment. And the idea of this session today is to be thought-provoking, is to give you some ideas of how maybe you can think differently about what you're doing at the moment, and to think outside the box about what are the reports that you're being produced as standard reports out of your system. So what are the objectives of effective reporting? First of all, strategic measures to assess performance. Now, this is necessary in all reports and not just board reporting. Strategic measures to assess performance. Everything we do in our school needs to be linked back to what the strategic planning is of the executive and the governance. All financial reports need to be linked back to the strategic objectives of the school so that they can be used as an accurate and contextual assessment of how the school is performing in meeting those objectives. Another objective of your reporting is that it is an understanding of your current school's position. The reports that you produce are there to help leadership in the strategic achievement of the school. Where is the school currently on that journey? That's the message, that's the story that we need to be telling in our reporting. Another useful objective is to be set performance benchmarks. Include them in the report as the context of other areas of your school. Put performance indicators of other schools into your reports as a comparative and contextual comparison. Economic stats, other industry benchmarks, all of these can be included into your reporting to increase the validity of your story. And we're extremely fortunate as well in our sector that we have organisations like Somerset Education and the wonderful work that John Somerset does in creating a lot of really useful benchmarking data. Learning and adapting, another really good objective of what we do with our reporting. It's an always continually changing process and something we should be adapting all the time. World never stands still, school never the same, each day is different. So all reports must be portraying the theme of learn from the past, adapt to the now, plan for the future. Because we all know, if we're honest with ourselves, churning out the same reports using the same data month after month is not going to achieve all three areas of this theme. Learn from the past, adapt to the now, plan for the future. That's what we're trying to do strategically. That's what our report should be doing to represent that journey. Learning, adapting, planning. Our report should be enhancing the communication and the engagement of its stakeholders. Are we providing information our stakeholders require, or are we reporting how we like doing it, or just how the system produces it by default? And we've probably all been a little bit guilty of that, haven't we? But our reports need to be engaging for the audience, and they need to be communicating the critical information required. So ask those vital questions. Are we giving the information that the stakeholders need? Effective reporting can be used to really improve collaboration, both in the school and outside the school. Resilience and efficiency are financial qualities all schools seek, especially in times of crisis. And internal and external collaboration of departments, of partners, suppliers, organizations, associations, software houses, etc., are really important. And a reflection of this in our reporting will promote these relationships and be able to use their data to achieve the strategic objectives. So work with software partners that have collaborated with your financial management system provider. Gain value of other data by using integrating applications and software that are able to add context and value to the data and the information that you're reporting on. Don't just stick with what's available in the core software or report suite. And lastly, in this section, fostering continual long-term improvement is a really good objective of our reporting, especially during periods that are less hectic, if that exists for business managers in schools. It's a nice utopia, isn't it? But review your reporting suite to ensure it promotes operational and strategic opportunities for improvement. Tell a story with a happy ending, which encourages the reader, your stakeholder, to want to get to the climax in the last chapter, which we hope is unified with that strategic planning objective of the school. So much has been said about effective reporting in that section. Let's have a little bit about how we may be able to create that effective reporting. And we're not necessarily going to look at loads of examples of reports. We're not going to delve into the software of PC schools. We're going to have a look at this as some principles that you can go away and apply in your own unique environment. Because as we know from working with schools every day, it doesn't matter whether they're a similar size school, we're using the same software, every school is different and all your stakeholders are different, your strategic planning is different, and so therefore your reporting should be different. It is your story. So let's help you be able to tell it. So here's some pointers to get us thinking how we can achieve effective reporting. Ask the question, first of all, what are your strategic objectives? That's where we need to start. Identify your stakeholders and what they are needing to achieve. And your stakeholders aren't always going to be your board of governors. Your stakeholder is not always going to be your principal. There are a lot of different stakeholders within the school environment and community that you're reporting to. And some of them not even going much further than your own team. We're reporting to people in various formats all the time. So Identify who stakeholders are and their relationship to the strategic objectives of the school, and help them to be eyes wide open and aware of what's changing within the school environment. Remember, strategic plans must not just be kept in a drawer, but there should be a real element of everything that we report on. So as business managers and finance managers, as COOs of schools, let's get those plans out of the drawer and let's start referring to those within our reporting. Know your stakeholders' responsibilities and expectations. And these will differ across your range of stakeholders, quite dramatically, actually. The same report is not going to be relevant to all stakeholders. And so we need to design the reports that we've got in our report suite, whether they're either in our software or whether in an external spreadsheet, Word document, or however it is, Power BI, however we're reporting our reports. Let's make sure we've got a user-defined default type report for each of the stakeholders. What do they each need? Now, we look as accountants, especially including KPIs into our reports, feel like they add something to the figures that we're presenting. But one thing we need to make sure is that the KPIs are relevant to your audience. That audience is going to be changing as well, depending on who the stakeholders you're reporting to. So understand what they need to know. But what do they need to know now, today? Because that may be different to what it was yesterday, last week, last month, last year. And it may also need a bit of looking into our crystal ball to try and expect what they're going to need to know in the next report. So that your reports can provide relevant snippets of information by a very effective use of KPIs. So don't be scared to be able to change their KPIs. It doesn't always have to be the same ones that you're reporting on. You want the relevant ones to this piece of the story that you're telling today. And talking of stories, ask the question, is your report telling a story? How does it read? How does it flow? What is the overall impression that your stakeholder is going to get from looking at that report? Everyone loves a story. We all do. It's how we're wired. And it's no different when it applies to reporting. Why not even be radical and call your reports stories, financial stories, operational stories, board strategic story. Financial and operational storytelling is absolutely critical within our school environments. And have a look at the style of your reports. Is the focus of your stakeholder maintained by a visual pleasing report? Or are we just running to the printer and pulling off what we've printed from our financial management system and whacking that out on the boardroom table? How are we presenting? Are we using technology? Are the reports available online before, after, during our meetings? Are we creating reports that are interactive, that are dynamic? The user is able to use them in a way that is suitable for what their needs are. And how you do this was, of course, going to depend on who your stakeholder is. And so you may need different ways of telling the story to keep them focused and to make sure that it's visually pleasing. Because one thing we don't want is to be causing confusion with our reporting. We want clarity. We want it to make it easier for the stakeholders to be able to do what the job that they need to do based on the data that we're giving to them. So make sure your reader is not bogged down in irrelevant information or overloaded with data. This is especially important in a time of crisis or emergency, or where there's some really big important decisions to be made within the school at leadership level. Is there a balance between summary and depth of info? Now, this is always a hard one, and this is something that we just have to work out based on the situation in which we're in and the context of our reports at that time. But things like, are we including an executive summary at the beginning of our reports? Some of our stakeholders may at some points be very time poor, but want to be able to gather the information that you provide. It's like reading the back cover of your book. Don't always have to get time to read the story, but you can read a summary of it. Include charts, quotes, graphs, etc. And further detail can always be provided in an appendix or as hyperlinks, as it gives them opportunity to drill down into other information or contextual reports. Really important when we're working with our software houses and our financial management systems is your data real-time relevant. And goes back to what we said earlier. Remember, financial statements are not. They are not real-time relevant. So how fast does the relevant information in your pool of data change? How do you easily collect this information and report on it? What we need to be able to do is report on the now and suggest how best to respond. This too is critical in a time of emergency or in crisis. We need to be able to report on what is happening now and what is the relevant contextual data to help us make the decisions. Now, it's very important for schools to develop an effective reporting process for all areas of reporting. Business managers are encouraged to use technology as much as possible to produce reports. This will obviously save time, and it really is a very valuable investment of money and time in being able to set those up, because it improves the availability of information, it enhances the interaction of the user. There's multiple benefits of spending the time in doing that rather than just viewing what it is that we've got on our systems at the moment. So maybe create some interactive dashboards with relevant widgets that are available online to provide relevant information to different needs of different stakeholders. So give different dashboards to different stakeholders that are always available for them with real-time data. So they're not reliant on when you're producing information, or they're not reliant on being part of the actual reporting process, or ringing you, contacting you, and you asking you for information that you go, oh, I've already provided that. Make sure that it's online so they can use it when they need it. Make sure your online reports are dynamic and the format can be easily changed. Enable the stakeholders to drill down into the data for more information, and sometimes even give them the ability to be able to create their own scenario analysis using the format and using the data that you've given them access to. Much of this can be achieved by collaborating with software providers or partners, and there's a lot of integration partners as well that work with PC schools that can help you with this. And we see, especially with some of the reporting that we get from the Nelnet sister company Fax, and the widgets and dashboards are available there as part of the data management and the tuition fee collection. But I think we'd all agree is those sort of reports are a lot more interactive and a lot more attractive to your stakeholders to use than a spreadsheet printout or a black and white P&L and balance sheet. Business and finance managers can be very effective in helping to guide leadership on the journey to meet the school objectives. That's a big part of our role. That's what we're there to do. We've all been reminded in recent times on how necessary this can be too when changes and crises affect our school environment. So let's just have a look in this section of some of the things to consider when reporting. And this isn't exhaustive, and these are just some of the things to maybe think about. Are we including these in reports, or how are we representing this data when we're reporting to our stakeholders? So first of all, have a think about your parent and stakeholder reporting. Are we relating to them a proactive storytelling report of data? And the parents that we report to are an extremely essential stakeholder of the process. They are a big part of the strategic plan of the school and the objectives that we have. And to have them on board and integrated within our reporting process is really important. How are we portraying our payment terms and the concessions and the discounts within our reports? Are we are they just going in as financial figures? Are we showing the story now, how we are supporting parents' loss of income? Are we analysing the impact on the cash flow and the debtor levels to the finance committee? Have a look how we're presenting financial scenarios to the board, rather than just giving them a cash flow or a P&L to actually just represent where we are at the moment. Have a look about how we are analysing the fund surpluses and deficits. Are we putting across some worst case scenarios of where we are, so they have a bit of an idea of the range of where we're sitting at the moment in our strategic plan and what is the story. Same with our gearing. Are we including any of our gearing data within our financial reports? But have a look at the impact of deferring loan servicing, or what does it look like if we increase our borrowings for a particular project that meets our strategic objectives? Have that information within the financial reports. Staffing ratios. These can be very important contextual data to our financial reports. And maybe we can include some information in there that are just respective to enrolment changes or other changes within the school, new building projects or expansion. How does that going to affect the financial sustainability of the school? Process costing. Especially if you're going through a change within the school and there's a lot of automation and technology we're investing in, maybe as a financial story within our reports, we can compare some of the traditional methods with some of the online methods or hybrid workflows, and what is going to be the impact of implementing those within the school. Budgets. We're always involved in budgets. We love them, don't we, as accountants and as business managers. One of those things we have to do is becomes a backbone of the school's financial reporting. But really, let's have a look at how we use those budgets rather than setting and forgetting. Let's identify non-essential costs or avoidable costs and present the financial impact of those on our forecasts so that we can use those budgets actively. Same with expenditure. It's very easy to just pull out expenditure reports, profit and loss reports, but maybe then we can take it to the next stage to help our stakeholders make decisions by highlighting immediate cost saving opportunities that we can use based on that data. Our purchasing function of the school. Are we representing in our reports some options for strategic decision makers to use about the financial impact of things like bulk purchasing, supplier savings, discounts that we might obtain, so that we can have some better decision making about our operations? Spend some time looking at the supplier ledger within the setup of the software and then reporting on it. Have a look at some of the indirect spend profile of some of the suppliers that you use at the school. Have a look at some supplier benchmarking with alternative suppliers, or speak to other schools, and then be able to collect that data from them and be able to present that to make better decisions to gain more efficiency within the school. And don't forget our assets and our people, the most valuable asset that we have within the school. Are we going to help leadership look at how best to use those assets that we have? How are we going to repurpose to prioritize with supporting different areas or objectives of the school? And let's do that by using financial modeling to be able to tell alternative stories that we might be able to predict by the use of those assets and the people resources that we have. Another big asset that we have is buildings and our capital expenditure. Obviously, absolutely critical that we're reporting on those within our financial reports. But let's have a look at some scenarios of what would be the effect of deferring expenditure on capital projects, the corresponding financial and non-financial effects within the school. It's not just money that has an impact, is it? Of course, on changing the master plan and the timing of those things within the school. And finally, the section ratios. We've spoken about this a little bit before, but really have a look at how we can use financial benchmarking within our reports and try and link those ratios and benchmarks to non-financial data too, so they can sit side by side as a real good context to the story that we're presenting and really aid our stakeholders with effective decision making. So what are the takeaway messages, I think, from today that we can go away and review and consider and implement within our schools and our financial reporting process? Well, it goes back really to the first 3 points that we made at the outset. Let's have a look at the timing of our reports. When to present relevant data that we can collect as effectively as possible and produce and circulate and distribute as and when needed. Have a look at the content of our reports. Really think outside the box about what information to include in our financial reports, an appropriate level of detail. And let's go away and really consider who our stakeholders are as part of our real participant in our reporting process and our workflow. Who is the audience that is requiring the information, and what decisions are they having to make? So what do we need to supply to them to enable them to do that? Because we are, as business managers, finance managers, and accountants within the school environment, really the guide to the rest of the team on a journey that we're all going together to meet those strategic objectives of the school, aren't we? So please make sure that you're enjoying telling the story. So now what we're going to do is we're going to have a bit of a Q&A session with one of Coles School Experts accountants and school specialists, Britta. And we're going to have a look at credible financial reporting for schools, specifically around governance and what information and reporting is required for boards. Okay, welcome back, and I'm now joined by Britta, who's one of our accountants and school specialists here at Coles School Experts, and we're going to ask Britta a few questions regarding credible reporting in schools, as Britta is daily involved within schools and finance managers and principals and boards, and helping them with their financials and their reporting. So welcome, Britta.
Thank you.
First of all then, what are some of the financial risks currently faced by schools?
In my mind, it comes down to one thing at the end of the day, and that's cash. What you've got sitting in your bank, but also what's coming to you in the future. Now, a school might have some debt, it might not. It might have capital payments it needs to make, but it certainly has got the ongoing high operational turnover, and that is the staff constantly needing to be paid. That's the biggest outgoing for any school. And the biggest risk for a school is to be able to make those payments. Really, it stems down to where are your enrolments coming from? Are your enrolments sufficient to cover the school fees? But not only that, is your cash collection sufficient to cover those school fees? So if families aren't paying on time, you run into cash issues in terms of having to go to an overdraft. Really, it all comes back to the enrolments you have at the end of the day and the cash that you've got sitting in your bank. And in my mind, that's your biggest concern, is that you have got that going concern.
Cash is king.
Cash is certainly king.
Today we've been identifying who our stakeholders are and looking at how we can make credible reporting. Big stakeholder with any school environment is the board. So, Britta, what does a credible financial report for boards look like in your experience with working with schools?
I think it has to tell a really good story. It needs to understand its audience. So a school board is made up of so many different individuals from so many different backgrounds, and they don't all have the financial knowledge that we do preparing those reports. Now, personally, I love all the data that goes into a report, and I'll happily sit there going through it forever. Not everyone shares my strange affinity for numbers, and they just want to know what are the important key points we need. Make it pretty, make it visual, but get that story across, and indeed know the story you're trying to get across. If you're trying to show a concern to a board member that maybe something will happen in the future, there is a problem with enrolments coming, what does it look like? What do they need to know about? And what do they need to address right now so that they can fix this problem before it occurs?
Now, you've mentioned there your love of data, and as accountants, we just love financial figures, don't we? But with what non-financial data is critical, in your opinion, as context to the dollars when reporting on a school's sustainability?
And again, yes, I love my financial data, and you can tie the financial data back to anything. But there is a bigger context of your KPIs, your key performance indicators. And I mentioned enrolments earlier. Enrolments certainly are a really big part of that. and your enrolments pipeline is a huge part of that too. But also understanding what the capacity of the school is. So if you're trying to get another 15 enrolments in there to make up your school's capacity, you also need to understand whether you can achieve those, well, not just achieve those 15 enrolments, but can you service them? Do you have the staff in place? What will it do to your headcount ratios? What will it do to your enrolment ratios? What will it do to your student numbers? So there's a lot more than just knowing what your financials are, but understanding what your headcount has done over time, understanding what your student numbers have done over time, understanding if there's a split between junior school and high school. Again, what has happened to that over time and what does the future look like? So definitely some non-financial things that you need to be addressing.
Definitely. And you've been involved in a fair few schools and their board report preparation. In your experience, what has been some of the definite do's and don'ts of board report preparation?
The first thing, know your audience. If you have a board member that is all over the numbers and wants that in-depth report, maybe this isn't the right format for it, or maybe this isn't the right context for it, but there can be a separate committee that they work on that they get that in-drilled numbers. Other boards, we need to understand our board members are normally voluntary and they are juggling so much more. They need a clear, concise report that tells them everything. The timing of what you tell them, knowing your story. It's, again, we have so much information in our heads and on our paper. We need to be able to quickly and accurately report to them what they need to know.
Okay.
Absolutely. And interpret it. We present one side of the story. We need to understand that we're selling that story to them, and then that they're not just listening to what we're saying, but understanding what we're saying. What are the implications of it? And again, that's where we step in to be able to really communicate everything that's happening.
I think we discussed earlier how we, as consultants and business managers in schools, are helping the school on their journey. So sometimes stakeholders aren't fully aware of the information they actually need to make effective decisions. So how can the role of a business or finance manager include board members in the reporting process to assist them to meet the strategic objectives of the school? So how can they be involved in that process?
And again, it's your audience, knowing your audience. A principal will get so much more information from us in terms of what families are making payments, what families are not making payments, who needs to be given sort of a bit more attention to, that sort of level of information. They'll also want to know what's happening with the variance analysis, not just in salaries, but all those other operational matters. A finance subcommittee will probably want the debtor information, but they won't be so interested in why some administrative costs are doing this month to month. They just want the end picture and what will it look like at the end of the year. A board is very unlikely to want to know how many pens or why the stationery budget's blown to pieces or the photocopying budget. They will want to know what money is coming in. They'll also want to know what the financial, I guess, liabilities are coming up soon. Will the school's cash balance be enough to pay the GST debt if the recurrent funding's just come in? Can they accommodate a loan drawdown as well as the interest repayments and the principal repayments if the debtors aren't making enough, bringing in enough month to month? Where's the cash collection at? They're the bigger things. Is your going concern status being compromised? That's going to be what I target a board for, but a finance committee will get that bigger information, and a principal I'd be more likely to have a weekly discussion with and just say, right, you need to be aware of X, Y, and Z, and how do you want me to handle it? Here's my proposal. Do you agree or not?
Yeah, it's very different, isn't it? The requirements are
Incredibly different. Yeah. And maybe a board member does want to know, we've had some cases where they do want to know that intricate variance analysis line by line. Of course they can get it. But if half the board's eyes are glazing over and they're thinking, I don't even know what's going on here, you've missed the audience and you need to rethink your strategy and how you approach it.
And I'm sure you will see as well with the various schools that you work with that each principal and each board is very different at different schools.
Completely different.
So you need to get to know who your stakeholder
Completely.
is.
Again, it's just knowing your audience, telling your story to the right audience.
Yeah, excellent. Now we're up here in collaboration with PC Schools and Nelnet, and everybody that's going to be watching this is going to be using a financial management system, of course. So Britta, how important is the financial software in the reporting process, in your opinion?
At the very start, it's so incredibly important. I cannot stress that enough. Get your setup right, get your information right. The last thing anyone ever wants is rubbish in, rubbish out. And unfortunately, it can happen so easily that all of a sudden your reports are meaningless because the data coming out is meaningless. And that comes back to your setup. It comes back to your processes in place. Okay. So if we move on and think everything is perfect in that sense, how important is the financial software? It's incredibly important so that you can extract the information you need. Now, the financial software will never interpret it for you. It'll give you pure data. Creditors are here, 30 days, 60 days, 90 days. What does that mean to me? What does that mean to the board? Black and white. Here's the numbers, you work it out. But if I have to spend 4 days pulling information out of the software, it's meaningless. We need to be able to extract it quickly and then move on. And that's where I say it comes down to so important to have good software and just to what you do with it. But at the end of the day, it is our job to interpret that data. So that's where the really meaningful things come in too. But as long as everyone knows, get the data right in the first place, we're okay.
Excellent, brilliant. Well, thank you, Brita. That's been a really useful insight into how credible reporting can be applied in the real school environment. And we appreciate your sharing that with us today.
No problem. Thank you for having me.
Brilliant. Thank you. So that really concludes what we're going to be considering today as part of this session. Anybody's got any questions, would like to discuss this any more with the Coles School experts, and our contact details are there on the screen. We would love to be able to talk to you and to help you with your reporting journey. Don't hesitate to contact us, and we'll wish you the best and speak to you soon. Thank you very much.